Hey everybody, this is Greg coming in with another Fundrise video. Today we're going to go over a new acquisition that Fundrise made today for Kingsland Heights. It's a fixed income property for the interval plan. And before we go too deep in here and we go over the thesis of the acquisition, please make sure if you like this video at the end, please make sure to hit that like button. And if you like what you see and you want to see more, please hit subscribe, because I try to come out with a couple videos a week just to kind of keep you guys abreast of what's going on in Fundrise and in my portfolio personally. I do a weekly update. So without further ado, we're going to go down here and kind of just do a deep dive. This is the Kingsland Heights single family rentals in Brookshire, Texas. Part of, again, the fixed income strategy. It looks like they invested $1.5 million in here with an active status. It's part of the Sun Belt. We'll go in that in a little bit more detail here of the acquisition. Looks like we're sharing this with the Fundrise Development E-REIT, and there's some equity here by a company and also some debt from Walton Street Capital. So I'm trying to figure out the 1.5 and the 3.7 just to try and figure out where the difference of money is in there, but we're contributing 16.7% in the interval fund, with 11% coming in from the development E-REIT, and a lot of it is just debt right now. So it looks like it was acquired in July, and we have an update here for August 25th. Can look at the pictures and kind of see what they look like. Not a whole lot of grass here right now, but of course they are new builds, and it is Texas. So it looks like they're preparing, and that's what the end product's going to look like once it's done. So let's go into the meat and potatoes of this. So new acquisition, Houston, Texas. They've invested roughly $1.5 million in the acquisition of the first phase. And if you've heard this from a couple of my other videos, these rental properties, what they're going to be doing is a stacked build procedure. So a lot of these developments that they're going to be in, you're looking at like a purchase of 10. They'll be building and they'll just be purchasing as they go. So I'm sure they'll explain this a little bit more on as we go in here. So the first phase of Kingsland Heights, a 96-unit single-family rental home community in Brookshire, Texas. It's about 35 minutes west of downtown Houston. At a strategic level, this investment fits within our affordably priced Sunbelt apartment and rental housing thesis. For millennials to retirees, broad group of Americans are moving and migrating from those northern states down to the southern states over the past decade, so it's driving that continued demand for well-priced, well-located real estate and supporting steady returns for disciplined investors. So again, these are for those investors that are looking for a 5, 10, 15, 20, even 25-year investment just for it to slowly move itself up here. So, as we read in our flagship portfolio update, we believe that this long-term trend has only been further accelerated by the pandemic. So they're focusing on remote work becoming the norm, and more people doing that, so they expect an increased share of population won't need to live in an expensive city and will instead seek out the local locations to offer lower cost of living and more agreeable climates. So this initial investment in the project was made by a joint venture between two Fundrise sponsored funds, which one being the interval fund, which any starter or basic setup is going to be into, and which invested roughly $916, and the development E-rate, which invested roughly $611. So it looks like these numbers have changed a little bit since this was initially written out. So the strategy, this investment follows a fixed income strategy where they're providing financing for the acquisition of brand new homes in exchange for earning a fixed rate of return of roughly 9% annually. However, as part of this investment, they've also entered into an agreement with the project sponsor that allows them to purchase the community once construction is complete and the homes are leased up. So once everything's done, they're going to be able to purchase the whole community for themselves. They'll be able to manage it themselves, and everything will be income to them and us as investors. So the combined effect of these agreements is what we're able to earn, is that we are able to earn an attractive income yield on our initial investment that functions similarly to a deposit, and we secure a new pipeline of homes to add to our single-family rental portfolio, which we intend to act on as a long-term, growth-focused investment. So their business plan, the goal of this investment is to produce an attractive income stream. That's what that fixed, income is, through financing the acquisition of new housing in a growing area. While the property itself is very similar to our other single-family rental home communities that you may be familiar with if you've been investing with us for a while, the primary difference for this investment is that we are providing financing to the project sponsor for the acquisition of the homes rather than buying the homes ourselves. So our investment at Kingsland Heights is structured as preferred equity, which functions like debt. We are entitled to a cumulative return equivalent to roughly 9% over the term of the investment. Our initial contribution of roughly $1.5 million helped fund the acquisition of 22 finished homes within the community, which is still under construction. The project sponsor, Banyan Single Family Residential, which you saw on that previous window that I was on, intends to acquire and lease up additional batches of homes as they deliver from the home builder, eventually taking ownership of 96 brand new single family homes within the community. As part of this investment, we've entered into an agreement with the project sponsor that allows us to purchase the community once it's at least 94% occupied at an agreed upon price relative to annual earnings. So this is known as a cap rate in real estate investing terms. So by locking into this cap rate now, we believe we will be able to purchase the stabilized community at a discount to market as demand for single-family rental homes continues to grow. So they're getting in low so they can make more down the road. That's really as simple as that is. So we've committed to invest a total of roughly $6.3 million into this project, which if we go back here, it looks like they may invest a little bit more than that, which will draw down over time at the project sponsor acquires new batches of homes. So it's just going to go in as they get more homes. So why did they invest? Fast-growing area, properties located within the Houston metro area, just 35 miles west of downtown. Between 2010 and 2019, Houston's population has grown 19% to approximately 7 million people. Making it the 5th largest MSA in the country, according to the U.S. Census. Social distancing friendly. I've said this in a couple different videos. They just believe that provided by the community's fully detached and individualized homes, it'll be attractive to renters. And just add that extra bit of social distancing so you're not just crammed together in an apartment complex. Institutional quality assets. So this deal is structured so as to allow us the option to purchase the entire community once it's at least 94% occupied. Should we choose to exercise that option, we will have added a stabilized institutional quality asset of 96 ready-to-rent homes to our portfolio, consisting entirely of brand new construction. So I don't think that's a bad idea. What do you guys think? Would you are you interested in this? Is this, this is a pretty nice looking community. It's all rentals. So nobody's going to own this except for the people investing in it in Fundrise. What do you guys think of this kind of scenario where they are essentially going through, instead of them buying them outright, it's this company and then they're buying it from them? What do you guys think of that? Do you think that's a solid way of doing this? Just make sure to let me know down in the comments below. So again, if you like this, please make sure to hit that like button. And again, please make sure to subscribe and hit that little bell so that you know when I upload another video to YouTube. Till next time, guys, take care.